What does it mean when you hear that a stock is overextended? The investing world has a language all of its own. It's kind of like shorthand. You can say a word or phrase and other professionals know exactly what you mean. In the fast-moving world of the stock market, you need to say a lot in as little time as possible. This language often shows up on the financial news networks. My wife often asks, "What did that mean?" Let's talk about a specific example, overextended. Here is what it means. Stocks trend. Oops, there's another word, trend. When a stock is going up or down, it tends to move in a defined range. The range can be drawn on a chart to visually depict the movement of the stock. This range has intermediate tops and bottoms. When you connect these points with two lines, it forms a channel. Oops, there we go again, another word. I'm going to use Apple stock to demonstrate. In an upward trending move, you draw a line connecting the low points of the move. This line is called the trend line. As you can see, we've connected the intermediate lows to form an upward sloping trend line. The next step is to draw a line parallel to the trend line that connects as many of the intermediate tops as possible. This line is called a return line. The combination of both lines visually creates a channel. Now on Apple stock, you can see that recently the move upward accelerated. It also broke through the return line and continues up on a very steep angle. You can see the price of Apple is clearly out of and above the channel. The amount above the channel would be considered overextended. So when you hear that a stock is overextended, you will hear more terms like it's a little frothy or it looks overbought. There we go again, more terminology. Here's another example of stock that is overextended. Stocks seem to come back into the channel, so you can see why an investor in a stock that is overextended may get a little nervous. Just so you know, you can do this analysis with major indexes. Here's the SPY, an ETF that tracks the S&P 500. In the past couple of days, it's been trying to come back into the channel. If we have a correction, oops, there we go again, another term. A correction is defined as a drop of at least 10%. So if the SPY corrected, that would be a 24-point move down, which, by the way, puts it right on the trend line again. Funny how that works. So right now might be a very good time to get hedged. Well, there we go again with the words. So until next time, this is Doc saying so long and stay hedged.